Hey guys, this is market update. So yeah, big week, right? US elections coming up. It will move the price of BTC. We're not going to focus on that because it's a moment in time. It's a tradable event. But the big picture is that right now and the next year or so, maybe 6 to 12 months, is usually the time where it gets pretty fun for Bitcoin. The Bitcoin halving cycle is on track just like every other cycle. And this is usually the part where we go through some big gains. So I definitely want to be long through the election, not going to trade it. I just want to be long because I think the next 6 to 12 months is pretty good. Look, doesn't really matter who gets in charge. This deficit is going to continue to get larger and they print. That's really the main thing, and that's why we're in Bitcoin, right? So that's what I want to go over in this video, explaining kind of more of the long-term effects of what's happening here and why Bitcoin will continue to be adopted and continue to grow, in my opinion. If you do trade Bitcoin though, check out Bybit down below. If you are a new user on there, you can click that link and get a deposit bonus up to $30,000 when you trade. Bitcoin cycles have yet to be disproved, and that is because Bitcoin is following actually the central bank cycle of currency debasement, right? We all know this by now. So I want to go through some of the facts and figures here as to why Bitcoin will continue to be adopted, because essentially treasuries, right, which are the kind of world reserve asset right now, US treasuries, right, they are toxic. They're completely toxic, and individuals are starting to find that Bitcoin is the asset that they're going to use as their treasury reserve asset. Not just individuals, which we've been doing it for 15 years, but now companies are doing this as well. And that's the big step. You've even got some smaller countries who are mining BTC. We all know this, and it's just bubbling up like this over time. So I want to go through that in this video. This cycle right here, you can see we are on track, right? We're on track versus every other cycle, and that's because the macro cycle is on track just like every other cycle, which is the debasement of the US dollar and other currencies. They need that to happen to debase the debt. And so those cycles continue. And so Bitcoin is going to continue to react like that, a neutral currency pricing in the debasement of currency. So the next 6 to 12 months is really when, when I want to be in this, because that's usually when the fun actually happens. So federal debt, total public debt in blue, and federal debt, total public debt, the year over year change. Look at the debt. Absolutely insane, right? Now, it's not really the amount of debt that's the issue. It's the amount of debt in relation to GDP and the interest payments in relation to GDP. So this is interest as a percentage of GDP. And Janet Yellen from the Treasury a while back said, if it gets over 2, we don't really want it to get over 2. Well, it's over 2 now, right? And so how do you actually reduce this? How do you reduce the amount of interest you pay as a percentage of GDP? We have to get inflation and GDP higher. And that obviously would reduce the amount of interest you pay in relation to that GDP. How do you do that? You stimulate, you print money, you debase the interest payments versus GDP, right? So the whole thing here, like Paul Tudor Jones said, all roads lead to inflation because you don't pay this stuff off. It isn't paid off. The way you do it, the way you try and draw this down is by inflating it away. And so what needs to happen is that the rate of inflation, the real rate of inflation, has to run higher than the rate of interest. That's called financial repression, which is why the Fed is cutting, even though inflation's really not below their target. All right, it's because they need the interest rate, the blended interest rate that the Treasury pays below the rate of real inflation, trying to reduce the amount of interest you pay as a percentage of GDP, trying to reduce the amount of public debt as a percentage of GDP. That's why GDP is a completely fake metric. It doesn't measure wealth creation, doesn't measure anything. They just fake this thing higher through any amount of stimulus to make sure that that is all running at a higher rate than the amount of interest that they're paying, because that's how they get they draw down the amount of interest that they're paying as a percentage of GDP. So all roads lead to inflation. And unfortunately, even with the immense amount of inflation that we've had over the last few years and throughout all of our lives, I mean, it's just literally, year after year inflation, still the debt is expanding, which is insane, right? So what's going to happen? Inflation will continue, which means you can't hold fiat, and treasuries themselves are toxic debt. And that is why individuals and companies are now trying to actually capitalize themselves with Bitcoin on their balance sheet as the treasury reserve asset. It doesn't matter who wins the election, medium or long term. Short term, it's going to affect things, right? Because one side is pretty anti-crypto, or has been, right? So not great. Maybe they get a little bit better over time. The other side has been very pro-crypto, but maybe that's just an election pledge and it kind of gets forgotten. So we don't really know how this is going to pan out. But the longer term, or the medium or longer term, is that these deficits will continue. Treasuries are toxic right now. No one wants to hold them. No one wants to hold them on their personal balance sheet. No corporation, really wants to hold them, although they kind of have to, because just of accounting standards and everything like that, but they are toxic, right? A toxic debt. No one wants them. That's why these companies are buying back their stock hand over fist, is because they know this debt is toxic and it's actually just seeping away from their capital every year. So the only thing they can do is just buy a stock back to try and capitalize the company again, right? So look at this. This is going to continue, and US Treasuries will remain toxic, and they will run real inflation above the interest rate. And so they are not capital, and you can't capitalize a company or your own balance sheet on them. And so even if this deficit gets a little bit narrower and they do sort this out a little bit, you're still going to be running the deficits, right? And so that means they're still going to have to run this inflation playbook. Now, there is a big difference between US Treasuries, which are toxic debt, right? You don't want to hold them. Look at this deficit running. So inflation will have to happen. So these treasuries are toxic. Now that's opposed to Bitcoin, which is reliable, solid, trustworthy capital, digital capital. It's not toxic, it's accretive, and that's what everyone wants to hold. MicroStrategy, they announced the pricing of $875 million aggregate principal amount of 0.625% convertible senior notes. What are these, right? So MicroStrategy is running a playbook as a public company where it is actually just all long BTC. So all it has is capital, real trustworthy capital, right? And there is a lot of demand for this, so much so that MicroStrategy are essentially getting given money for free because they can issue all of these different securities against capital that they have. Now, these convertible notes are unsecured, meaning they're not secured on the Bitcoin that they have. In fact, these senior notes are unsecured notes, meaning if you want to buy them, there is no security backing them, and they pay this tiny interest rate, 0.625%. No one's buying these convertible notes if they're a hedge fund or a bank or anything because of this tiny interest rate. These convertible notes are essentially a call option on Bitcoin, and so they're a call option on capital, right? And so when you're trading these convertible notes, you can go and buy the convertible note, and the downside is you get redeemed at par. And the reason you can get redeemed at par is because, well, they do eventually, if they need to, have capital there, right? MicroStrategy. They can sell their capital to fund the notes if they need to. But they're unsecured anyway, so you don't actually have any call on them anyway, right? So the reason you'd buy these is because you think, look, MicroStrategy's business, it chucks off some cash and I'm fairly certain that they're going to pay that back, right? And if not, I can just convert those notes into equity anyway, and the equity I can then trade out pretty easily. Why? Because there is demand for the equity, because the equity is an equitable ownership of the amount of Bitcoin there, which is capital, right? And so that capital is actually gaining 40% a year, right? Because it's an asset growing, right? But in any case, it's capital. It can be liquidated very quickly. You can liquidate the shares very quickly because there is a lot of trade around the MicroStrategy shares because there is capital on the balance sheet. Capital on the balance sheet. MSTR is one of the highest traded stocks in the whole stock market in the US, right? And it's the highest traded in relation to how much its market cap is, right? So there is capital burgeoning through this company, creating volatility, creating vitality, creating options for people to trade. You can trade the convertible notes because they're an option on the shares, which obviously have Bitcoin underneath it, which is growing over time, right? And so capital is vitality. This is essentially a toxic mess. You know, it's like in The Lion King when Simba's sitting there with Mufasa, right? And he's saying, this is all of ours. And it's like this beautiful, lush grassland with animals and zebras and, gazelle and absolutely perfect. That's Bitcoin. And then you look on the other side and it's like this wasteland dead and there's nothing there. That's US Treasuries, right? There is toxic debt that just collapses a company and they have this toxic thing on their balance sheet they need to get rid of. And that's why they keep buying back their shares. But if you have real capital, this burgeoning capitalism essentially encapsulated in Bitcoin, it's an actual asset and it creates volatility and then it creates opportunities to actually sell volatility. MicroStrategy are selling volatility and buying the asset. They're getting given money for free because of the volatility. People then can go and say, I can trade the convertible notes. I want the call option. I have this downside, or I can buy MSTR, which has a call on this Bitcoin anyway, right? So capitalism needs capital. US Treasuries are not capital because they have to run the interest, they have to run the inflation higher than the interest. So they're toxic. This is not toxic. This is an actual asset. This is why all companies are starting to come over and say, oh, we like this thing, right? And it's going to take a long time to get through, but we are here right now and we can buy this lush, fertile, capitalistic asset as well. If you have a genuinely long-term horizon, like a real investor, right? So you're saving for retirement, you have your ISA or your IRA, and you're putting the ETFs in there and their tax advantage and all that. That's great. So what can you buy? Right? You just can't buy bonds and treasuries. There's no period, there's no 20-year period where the currency has just got stronger and stronger and stronger like an asset over time. That's not what it's designed to do. The whole idea of a national currency is so that the central bank can print it and the government can create credit and essentially spend that in the economy without having to ask for people's tax receipts in return. That is why it's invented. So you can't own it if you have a 20-year time horizon. Ratio of gold price to Bloomberg total return treasury index, right? Just higher highs and higher lows. This is gold versus treasuries, right? Let alone Bitcoin. So if you have a long-term time horizon, you have to get out. Property is a currency derivative, right? It's a credit derivative. Stocks can, do well because they can increase prices to protect against all of this. Bitcoin is just a neutral currency. It'll price all of the debasement in, and it will price in the actual wealth creation where other humans are working to produce stuff and make it more abundant for you. Shorter term, really the top of a bull market is when new entrants come in and start having to pay much higher prices to incentivize existing sellers to actually sell out, right? And those existing sellers have been in before, and they're trading the different, trade of the cycle, which is they're buying in bear markets and waiting. And a lot of new entrants haven't done that, and so they actually want to get in. They have to incentivize existing sellers to actually sell that Bitcoin because there is basically nothing on the market. You have to buy it off people that already own it. The only way you do that is by pushing the price up. So we're seeing that distribution happen this bull market only once, but I don't think that's the peak, right? That was the ETF flow, and it makes a lot of sense that very long-term holders would wait for something like the ETF as a liquidity event to sell out. So that price was pushed up to the all-time high, and you got some selling from long-term holders here. You can see the previous bull market as well. It's exactly the same thing. When long-term holders eventually are incentivized enough to start selling, you get this big distribution. That's the real bull market. Now, new entrants are coming in, paying much higher prices. These guys have to be locked in for at least 4 years, right? Because you can see them paying these prices here. If we fast forward, you've basically got a bear market. They're all sitting underwater. So these guys, they should be in for at least 4 years or a very, very quick trade waiting for the next pump. They're the only two things. Medium term, they're going to get wrecked, so you get that bear market, right? So big distribution here. That's a real bull market. We've had one here, but you see people actually starting to accumulate again. And as the price moves up, maybe some distribution. Doesn't feel like a massive distribution event to me yet. And that's really the end of a bull market when you get that. And we're not there yet. So short term, I still think a way to go as well. But like I said, longer term, you just have to be out of treasuries because they're toxic. They're literally invented so that the central bank can print them, right, for free, or the government can just create this debt and spend your money and then without actually having to tax you and take your money away from you to spend it. So they're literally designed just to spend, right, like profligate spending. That's what it's designed for. So you can't hold it if you have a 20-year time horizon. If you do trade, Bybit deposit down below up to 30,000. The crypto investor course will be updated in the next week or so as well. A bunch of videos there. So if you have the course, that's coming for free. I'll let you know in the Discord groups when that's coming. If you don't have it yet, I'll link the crypto course down below as well. I'm James, this is Money's EG. Cheers for watching, and I'll see you in the next one.